Ready to elevate your credit understanding and score? With insider tips and a plan, you can take action to improving your score, which can save thousands in unnecessary finance charges. Let's tackle today's topic with your coach, Credit Christy.
Hey friends, it's Christy, your credit coach. Thank you so much for joining me for another episode. Today we're talking about something huge and urgent. Student loans are officially back in swing. The forbearance is over, and brace yourselves because somewhere around 24% of borrowers of student loans are already delinquent. So let's talk about how student loans affect your credit, your future, and the ripple effect that this might mean for all of us. So what's actually happening? So because of the COVID pandemic, student loans across the board were in forbearance, and that actually ended last year. And by early 2025, the on-ramp protection expired. So any missed payments, well, it now hits your credit. And as of April 2025, somewhere between 24 and 31% of federal borrowers are 90 plus days late. They're delinquent. And that's somewhere around 5.8 million people that have delinquencies and late payments showing up on their credit report. So this is the most serious number ever recorded, and it's having a really terrible impact on your individual credit. So let's talk about why this can be such a credit disaster. Well, the traditional FICO score model leans really heavily on payment history. It actually makes up about 35% of your overall credit score. And one missed late payment, a 30-day late, it can have a pretty drastic hit on your credit. Now, it's difficult to pinpoint exactly where that's at because if you have a really high credit score, it's actually going to hurt you worse than if you have a lower credit score. But here's something important to know. A 30-day late is one thing. A 60-day late is another. A 90-day late? We're talking anywhere from 60 points hit on your credit score to upwards of 175 points diminished from your credit score. I mean, talk about a plummet. That is a punch to the gut. But this isn't just about the score. The late payments can literally block your ability to get approved for credit cards, for car loans, and even a mortgage. And if you do get qualified, it could put you in a position where you have to pay significantly higher in interest charges for that approval. So then, of course, that brings us to your personal impact because your future could be on the line. Even apartments, employers, insurance, they all pull credit. And if your student loan is delinquent, lenders and those creditors may see you as a high risk. I know of some apartment buildings that if you have under a 600 credit score, they will not accept your application to live there. And if you are able to get approved for loans and credit cards and those kinds of things, that higher interest rate can translate into tens of thousands of dollars of unnecessarily higher interest charges over time. But it would be heart-wrenching if your score came down so low because of these late payments that you no longer have the ability to work at a certain place or keep your insurance rates that you currently have. So these missed payments, they might cost you so much more than just money. And for a couple of my clients right now, I've pulled credit and they did not even know that they were late on student loan payments. One couple I just pulled a credit report for, when they were applying for a mortgage, she had 20 different little student loans. Most of them were about $3,000 to $4,000 each. Well, 17 of those were showing up as 4 months late, 120 days late. And not only did it destroy her credit score, it's also keeping them from being able to qualify from buying a home. And for them, they've actually located the home and negotiated a great price with the seller. And now to find out they can't qualify. It's heart-wrenching, it's goal-breaking, and it's frustrating. So I'm just curious in thought as well, what is this going to do in our larger societal or economic situation? So with all of these student loans coming back in repayment, that monthly payment needs to be added to the budget. These late payments if that's the case, and for 24% of the people out there it is, having a negative impact on their credit, that could have some consequential hits to applying for new homes, new cars. It feels like everything might shrink a little bit. And then what happens if they go into default or collection status? It's an additional negative impact on your credit, but the overall bearing on our economy, I feel like it's going to have some drag on people's future goals. So what can we do right now? If you have student loans, or if you're not sure if you have student loans, check your status. You can go to annualcreditreport.com and get a free credit report. You could also pull your credit report from Experian or Credit Karma and just check and see if you have student loans and what status they are in. Are there late payments showing up? If so, call your loan servicer and get put on a payment plan. If they're not late yet, go ahead and set up auto pay so that you don't have a single payment showing up late. And if you're struggling, see if you can apply for income-driven plans. But you don't want to delay on that. I believe that the applications are quite backed up now that student loans are back in repayment status. So do find out what it takes to apply for an income-driven plan. And then figure out a way to prioritize those student loan payments. You do not want those going late or in default because of all of the reasons I just listed on how it can have such a negative impact on your credit. If you've already missed some payments, see what you can do to get back on track. Let them know perhaps you didn't know about this information. Not everybody listens to the news. And in some circumstances, if you had student loans from years and years ago, you may not even be using that email address any longer to get notifications. Your phone number or your mailing address may have changed. So there's a really good chance that the student loan creditor didn't get that information in front of you for you to know to start getting into the repayments. And if that's the case, and you can prove like I really just didn't know, there might be an opportunity for you to negotiate with that creditor to have those late payments removed, get caught up on what's owed, and start fresh with a new payment history now. I just know the last couple of credit reports I've pulled and they've had student loans, they felt blindsided and honestly truly overwhelmed because one sweet client didn't even know that student loan existed. She believed that 5 or 6 years ago she paid it off in full and she had paid off a Sallie Mae. But this is a different one. It was a consolidation from loans that she had in 2011. I mean, how long ago was that? Out of sight, out of mind. And so here we are applying for a mortgage of buying her first home. She finds out she has a collection of a $42,000 student loan she didn't even realize was there. So it really set her back. It's creating feelings of overwhelm. And I just want you to know this doesn't define who you are. Awareness is superpower. So get ahead of the impact. Look at your credit. Explore your options with your loan servicers and do all you can to protect your valuable but fragile credit score. Thanks so much for being part of this journey with me. Thanks so much for listening today. If you have any questions, reach out to me at questions@creditchristie.com. And until next time, my friends, stay well.
Subscribe now and share with a friend to stay in the loop for new credit content and insider tips to maximize your credit knowledge. And follow Credit Christie on Instagram.